Welcome to Realcast. I'm joined by Dan Innes to look at the week in real assets. Really interesting for me to be back at live events over the last 7 days, both in Warsaw for the CE Summit and in London, with a look at ESG, geopolitics and transformation in the sector. The overall sentiment in Warsaw was positive, both from the international and local speakers, with Sabina Reeves of CBRE Investment Management saying that capital will look at geopolitics much more closely, and investors are really thinking about where their assets are, and that from her point of view, CE will benefit from this shift. And just the pace of change in Warsaw, in a way, was even more noticeable, having been away for 2 years, with both the venue for the conference in Norblin Factory and where we had the drinks reception at the Skyliner building, as well as my hotel, all developed since I was last there a couple of years ago. Interesting comments also from Marek Matraszek of CEC Government Relations on the belief that, rather like Finland in 1939, Ukraine had now guaranteed a future as a fully independent state. Logistics and residential, as well as food anchor retail, were seen as key areas for investment, with Robert Dobritsky of Panettone suggesting potential rent rises of 20 to 30% in the logistics sector. Interestingly, also a sense that many businesses from both Russia and Ukraine could be relocating to Poland or Romania. So an expectation of increased demand from that side. And the growing focus on ESG in the region was also noticeable, especially with talk of Poland, instead of returning to a focus on coal, actually really accelerating renewable energy in light of the crisis in Ukraine and the shut-off of gas supplies by Russia. You can access all of the content from the summit on demand. And of course, there'll be more news coming in the week on that. But Dan, what have you been tracking in terms of the news?
Well, it's been a really busy week. In terms of the build-to-rent sector, a lot of titles this week covered the story about Gatehouse Bank and TPG Real Estate Partners. They've launched a new platform called Start Living. And that's a new build-to-rent platform focused on the single-family sector, which we've only seen that emerging in recent months, having followed the sort of bigger individual apartment, sort of young professional build-to-rent market. But the single family sector, is something that I think we're going to see more and more of. But the Start Living platform, it's going to deliver its first homes in Lincolnshire in the UK. A bit of background, if you're not familiar with them, Gatehouse Bank is a pioneering UK bank that offers Sharia compliant savings, home finance, buy-to-let finance. And their initial joint venture and target with TPG is 2,500 homes with a GDV of £500 million. The joint venture has a bit of an appetite to exceed that if the right locations can be found all around the UK. But the launch of the brand and the delivery of its first homes follows that formation that some people covered in a fundraising last August, but the launch of the platform has only happened now. So really expect to see Start Living hitting the headlines. Elsewhere, React News reported that NPS and Hines emerged as the winning bidder on that John Lewis flagship store building on Oxford Street in London. And that deal allows John Lewis to stay, but also develop one of London's most desirable and central pitches in the West End. And it gives Hines and NPS a chance to grow their $1.6 billion build-to-core venture. If you remember, NPS, the National Pension Service of Korea, they had already partnered with Hines last year when they acquired that historic Pacific Gas and Electric Company campus in the downtown financial district of San Francisco. And that was for a $2.5 billion development program in something that people were sort of dubbing one of the largest projects on Market Street in San Francisco for the last 10 years. So it's, so this new winning bid, I think it's quite exciting news for Oxford Street and the West End. And then for those of you following the logistics market, React News again reported that Investec is getting ready to sell their €1.5 billion pan-European logistics platform. And we, having seen that £550 million Firethorn logistics portfolio sale to Kane at the beginning of March, I think there are very few opportunities of any scale to take advantage of in this sector. So, that Investec news, I'm sure will be welcomed. It'll be hotly bid for. And then in other research this week covered in City AM, Avison Young, they kind of reviewed the activity in the London office market with some £5 billion worth of assets changing hands in the first months of this year. And that's big deals that included things like, Korea's National Pension Service, again, paying £1.2 billion on the UBS city headquarters at 5 Broadgate, alongside Google that bought that central St Giles site for a consideration of about £762 million. And the Singaporean property investment fund Hobie Land also paid that £718 million for the city's Scalpel skyscraper development. So that's the highest level of investment in London office space since 2018. So we're already exceeding pre-pandemic levels, which is really, really good to see. Elsewhere, Brookfield, the Canadian global alternative asset manager, they've launched ARC, the Advanced Research Clusters, a new brand, which is effectively, it's a science, innovation and tech real estate platform. And it's seeded that new portfolio with assets like the Harwell Science and Innovation Campus in Oxford and the Arlington Business Park portfolio in the UK. And Brookfield said that ARC's going to bring together place-based clusters to focus on global challenges like climate change and the pandemic. So that kind of follows Brookfield's 2020 acquisition of a 50% stake in Harwell in Oxford, and that £714 million acquisition of Arlington back in 21 last year. And in terms of who's behind these kind of ventures, you've got Stuart Grant, formerly at Stanhope and now co-founder at Core Life Investors. He's behind this venture as well. So one to watch there, Richard. And then you've got a quick string of other stories. LaSalle, they're launching a new strategic partnership with Numa. They're going to purchase, refurbish and operate soon to be vacant urban hotels, apartments and boutique hotels in a pipeline of 15 city centre assets in UK, Spain, Italy and the Netherlands, in a portfolio that's going to be worth around 500 million euros. So that hotel and leisure and hospitality market is growing. And then lastly, this week, it was great to see that MAPIC is making plans for its 2022 event. And that's going to be held on Tuesday, November the 29th. Until Thursday, December the 1st. So, I think many exhibitors and marketing teams are going to be mobilizing for that. But they've kind of rewritten the MAPIC rule book this year, and they're going to be taking a much deeper dive into the fundamental changes impacting on the retail and leisure sector. So, it's been a busy time over Easter, Richard. Back to you.
I saw Collier's as well saying that European commercial real estate was proving to be resilient despite the headwinds. Knight Frank on the positive outlook for UK healthcare markets. Noticed as well German investor Carestone selling 9 senior facilities for 168 million euros to an international investor, as well as Israeli funds backing Fujian in terms of 320 million euros to support investment in onshore wind, battery storage, solar and green hydrogen. And this was obviously a very large part of the discussions we had in the sessions both in Warsaw and London, and the fact that renewable energy is going to be one of those key drivers and drive even more of a crossover between real estate infrastructure and that real assets side. I also noticed British Land selling a 75% interest in the majority of its Paddington Central assets to Singaporean sovereign wealth fund GIC for £694 million. So actually a lot of activity in the market over the past 7 days. And just coming back to the CE summit, it was interesting to hear that 10,000 refugees are arriving in Poland per day, but 20,000 are actually returning to Ukraine. And I spoke to an investor in London who just invested in logistics in Ukraine, close to Lviv. So maybe some positive signs, both for the CE region, but also specifically for Ukraine this week. And thanks very much, Dan. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.